I hope that many people kind of join in, because if you don't, you run the risk of being left behind.
Você está ouvindo Contos do Cripto.
Okay. Hello, everyone, and welcome to we're Contos do Cripto, and in here we talk about economy, blockchain, and cryptocurrencies in the crypto space. Our guest today is a very special guest, Professor Campbell Harvey. He's a professor of international business in Fuqua. Did I say that right? I feel like I botched it. I wouldn't want to. Sorry, at the Business School of Duke University, one of the most prestigious American universities. So thank you, Professor, for being with us here. Not only has he taught on Coursera, blockchain business model, which went live back in 2019, but he's also been an online educator for more than 20 years. He's a pioneer in remote learning. In 2021, he published a book called DeFi and the Future of Finance, which is what we're talking about in this episode, that and other stuff as well. So welcome, Professor, and it's great to have you here.
It's great to be with you, so thank you.
All right, so let's go for introduction. So here with me is Estevão Rizzo. You can introduce yourself.
I work in the crypto NFT space. I work at a company called NiftyFi. I'm the head of marketing there, and I'm one of the hosts here in the Contos do Cripto.
I'm Kenneth Corrêa, and I'm the head of strategy for a Brazilian ad agency called 820 Marketing, and I'm also a crypto enthusiast.
And I am Thiago Earp. I'm a crypto educator and a long-time enthusiast. I currently work as head of community and comms for a blockchain fintech company called Public Mint, and I'm here as your host today. So I'll just open up by saying, Kenneth, you should start over filling his story and how he actually got to know Professor Harvey and how he ended up here with us. Kenneth?
Okay, thank you for asking, Thiago. I'm trying to hold my expectations here, but I'm very happy that this could happen today because I have run into Professor Harvey's content, online content, digital content back in 2003. So that's approximately 20 years from now, which I was working. I'm a business administration in my graduation, and I worked a final thesis on the classification of assets. And when I started browsing and looking for Portuguese literature on it, I felt that it was not good. I kept on reading. It sounds very interesting, but not complete. So I started browsing online. Okay, so this is the internet back in 2003 again. And I ran into his videos. By that time, the broadband connection in Brazil was like not broad at all. So I had to download those videos and watch it by myself. So I really enjoyed his content from that time on. So I graduated. So thank you very much for that help. I think I never had the opportunity to thank you. So I'm doing it right now. And of course, when we started Contos do Cripto, we started talking about cryptocurrencies. I was browsing and looking for people that we could invite to the program. And then somehow I remembered about those online classes from 20 years before, and then sent Mr. Harvey an email, which he promptly replied. So again, so that's my origin story regarding how we got here. He accepted the invitation, and we're here in the beginning of 2022 talking about DeFi, which I'm an enthusiast as well.
Okay, so let me start with the first and I think the most obvious questions, because everything is new when you talk about crypto and blockchain. So let's not assume people know everything. So my first question is, in your own words, what is DeFi?
DeFi is decentralized finance. And the question is, what does that actually mean? One way to think about it is it's a method to do finance where you kind of remove the middle layer. For example, banks and stock exchanges, brokers, insurance companies. I'll give an example of a decentralized exchange. I've got asset one and I want to buy asset two. So what I can do is to send asset one to an algorithm. And then the algorithm, which is completely transparent, will send me back asset two. And I can see the price. And I can do this 24/7 and do this at extremely low cost. So effectively, what we're doing is interacting with an algorithm. And this is called decentralized exchange, or DEX. It's part of DeFi. And it's not unreasonable to think in the future that we'll be interacting with algorithms in many different applications, not just finance applications. So this algorithm exists on a blockchain. It is not a centralized, controlled by a company or anything like that. It is basically enabling peer-to-peer exchange. So that's an important part of DeFi, but DeFi is more. It's about payments, where again, you don't need to use a bank for the payments. And it's about being paid also. It's about savings and earning interest on your savings. It's about borrowing. There's many different layers here, including tokenization, which essentially is the idea that you can take all virtual and physical assets and tokenize them. And indeed, quite popular today is the world of NFTs, which are non-fungible tokens that are often associated with digital art and gaming, but there's many other applications for that. So this is the essential idea of decentralized finance, where you're putting people together and they're interacting between peers enabled by an algorithm, and you cut out the middle layer, which is very costly and insecure and slow and inefficient. So that's the promise of decentralized finance, to improve on some of these problems and allow for a much better way to interact.
Thank you for that. And well, I think it's a lot to unpack there, but I guess that the best follow-up for the question that you so thoroughly described what DeFi is, maybe the second biggest and most pressing question would be, why DeFi? So what is the problem that DeFi solves? You touched briefly on that, but then you could actually tie it up with how it actually solves the problems that you mentioned about the centralized and the centralized entities and intermediaries in between transactions. So why DeFi? What's the problem that it solves, and how does it do that?
Yeah, so it's really important with any new technology that it solves a problem. And indeed, there's many technologies that solve problems, but what you're really looking for is to solve big problems. And let me describe a few of the big problems that exist today. So number one, our centralized financial system is not very efficient. And indeed, the architecture really isn't that much different over the past 100 years. You've got digitization, but it's basically the same thing. I feature in my book an image of one of the first wire transfers, Western Union from 1873. And it's for $300. And what was interesting to me was that the fee for it was $9, which is like 3%. And it's 150 years ago. Yet when we swipe a credit card, we routinely pay 3%. And that just seems like that's a huge fee, 3%. It's interesting, after I published the book, a number of people contacted me and said, it's worse than you think. Go try to do a Western Union wire transfer. So I actually went online to do that, the $300, and the fee that was quoted to me was $45. So again, this is very, very inefficient. If you're doing like a regular wire transfer, it could be 2 to 5 days between the actual transfer. If you're buying stock, it takes a couple of days to get that stock into your name. And again, it doesn't make any sense in the era of the internet that it takes so long. In decentralized finance, the actual trade and the settlement happen at the same time. So the execution and settlement are identical. There's no 2-day lag. So inefficiency is the first problem. Second is the lack of inclusion in our current system. So 1.7 billion people in the world are unbanked. And that to me is completely unsatisfactory. So it's also that there are probably more than 1.7 billion people that are underbanked. And let me describe what I mean by underbanking. So suppose you have a bank account and you're an entrepreneur, you've got a really exciting idea and it needs to be financed. So you go to your local bank and pitch the idea, and the banker likes the idea. It's targeted to return more than 20% a year. And they tell you, okay, well, nice idea, but we're not going to give you that loan because we prefer to deal with one larger customer than 100 people like you. But given that you're a client of the bank and you have a credit card with us, we'll bump up the limit on your credit card so you can actually borrow on your credit card to finance this idea. So you know what happens when the rate that you have to pay borrowing on the credit card is so enormous that whatever profitability this idea has is wiped out and the project isn't pursued. And these are exactly the type of projects that need to be pursued to enhance economic growth. Yet today, all of the financial frictions that exist cause that project not to be pursued, and this directly negatively impacts economic growth. Indeed, I have academic research on precisely this point, that there's a direct relation between kind of reducing the financial frictions and enhancing growth. And part of this problem has to do with the structure of our centralized financial system, that the banks are highly concentrated. Some countries are even worse than the US, which means that they've got market power. It means that the savings rate that they offer is really low. The borrowing rate is high and selective. And what decentralized finance does is, in decentralized finance, everybody is a peer. It doesn't matter who you are. Everybody's banked. Your bank is your mobile phone, and that's it. And you can transact very efficiently and securely and eliminate a lot of these fees. There's many other problems, but one problem is the lack of interoperability. So let's say you want to buy a stock. Well, how do you do that? Well, you need to transfer money from your bank to your broker, and that could take 2 to 5 days. In decentralized finance, you go to a website, you link your wallet, and you're ready to go. There's no delay. It's instant. And that's very much a part of Web3. Web3 is a technology that enhances very significantly the internet, the web that we've got today. There's no usernames and passwords. You just need to buy things, you're ready to be paid, and it completely changes the experience of the web. So all of this is made possible with decentralized finance. So there is no Web3 without decentralized finance and cryptocurrency. So this is very, very important problems that are being solved.
As you were speaking, I was thinking about, I learned about the redlining in US, right? When African Americans couldn't borrow money to buy housing. And this wouldn't have happened in DeFi, right? You were a number on an algorithm. If you have the algorithm understands you can borrow the money, you can borrow the money. You wouldn't have someone looking at your color to determine if you can borrow the money or not, right?
Yeah, so that's a great point. So we're all peers in decentralized finance. So there's no customer, there's no banker, there's no institutional investor or retail investor. Everybody is a peer. And it doesn't matter if you're large or small, everybody is treated equally. So this is a technology fundamentally about financial democracy.
So with just a follow up from that one, with regards to the widespread adoption and use, it's one of the key features of DeFi, as opposed to the TradFi, the traditional finance and banking, is that it offers higher and more like, for lack of a better word, more generous returns on financial capital, irrespective of the kind of product. Even it's cheaper to contract insurance. It's a decentralized way. It's more profitable to use the money markets, as in you can see around all these companies that offer them, and you can compound much higher than traditional banking rates. So how is it that DeFi can offer, just for our audience to understand, how is it that it's a huge component, right, of adoption? I mean, you get people to jump in and buy the idea, it sells itself, and you can make 100 times more than what your bank pays you, right? So how is it that DeFi can offer such high returns compared to TradFi? How much of it is a risk premium versus increased efficiency?
So this is really linked to the problems of centralized finance. So number one, I mentioned that decentralized institutions have market power. So with that market power, they can drive those savings rates really low, and the borrowing rates are high, higher than like a purely competitive situation. But the other factor is the savings in terms of efficiency. So with a traditional bank, you've got to pay for the bricks and mortar. You've got to pay for all the employees, the security systems, the advertising, it even goes beyond this, that the shareholders expect a dividend. Where does that come from? And so all of these are costs of having a middle player that are eliminated. And in decentralized finance, you can get reasonable rates of return when you deposit some capital. And to be clear here, you don't need to be depositing risky cryptocurrency. You can do this with a stable coin. So in the US, you might have a savings account with dollars in it that are earning less than 1%, probably less than 0.5%. So what you can do is to take those dollars, translate them into a dollar-backed stable coin like USDC, then deploy that and actually get a good savings rate. So this could be 4 to 8% that you could actually get. So the reason that the rate is high is multifaceted. So we've already talked about there's no middle layer. So that's important. So you save all of that. But there's also something that's really important in decentralized finance is that to get people interested in your idea, in decentralized finance, we often offer a reward for that. So there could be the rate of return that you're getting is partially due to the interest that you're earning, but then you're also getting something extra, another token, and that increases the rate of return. So almost like, the centralized analogy here is you deposit some money in your bank and you get some interest, but they also give you some equity in the bank as a reward. That just doesn't happen, but it does happen in decentralized finance. So all of this, you put all this together and you get reasonable rates of return that at least match the inflation rate, which doesn't happen in traditional finance. That people are losing their wealth because of inflation. And your question also talks about the risk dimension. And in my book, I'm very careful to devote extensive space to discussing all of the risks in this space. And this is not risk-free. But if, for example, you're dealing with a well-known protocol, dealing in a stable coin, the risk is fairly low, but it's not zero. So some of that return has to do with the risk. And if it is a new protocol that's offering enormous interest, like 100%, you need to be careful because that's really not sustainable. And that could be just a compensation for risk. But the ones that are offering like 4 to 8% that are well tested, and again, it's an interesting space because everything is transparent. So you get to see everything. So indeed, our current financial system, another issue, another problem with it is that we just don't have that much transparency. That you go to a bank, you're not really sure how healthy the bank actually is. You can rely upon regulators to watch over the bank, but the regulators have a terrible record of basically ignoring problems until a crisis actually occurs. In this space, you see everything. So you see the algorithm, you see all of the liquidity. If you're being paid by somebody, you see that they've got the money to actually pay you. So this is a completely different system that doesn't suffer from the opacity problem.
Right.
There's one thing that has been really weird for me. I started talking about blockchain and crypto on my LinkedIn, and I got really bad feedback. Like, oh, you're talking about scams and pyramids, and it's weird because for me that I've been working in this universe for a while. It's weird to hear people talking about, oh, this is a scam, this is a pyramid or something like this. So do you have like anything that you could tell me that it would help me convince people that this is something like, I usually say to people, this is like the internet. At the beginning, nobody saw potential, and now like all the communications go through internet. And I think blockchain is the same thing. This is going to do the same thing for finance, right? So do you have any advice for me to talk to these people?
Well, the first thing is those people need to be educated as to what's actually going on in this space. So often people make a reaction like this because they don't really understand what's going on. So number one, this is a new technology. And with any new technology, there's risk. And part of that risk is that some people, given the space is not regulated because it's new. Like the laws were written, decades ago before the idea ever arose of cryptocurrency. So there is a regulatory gap. And yes, there will be some people that take advantage of others. You need to be careful in this space. But this is no different than any historical innovation. There'll always be people that are going to try to scam you. So you need to go into this understanding the risks. And for example, there was a token that was launched that was supposedly linked to the popular Korean Squid Games. And people thought it was linked. The website was misleading. There were fake tweets from Elon Musk, obviously fake tweets promoting it. And people started to buy, and the price went up dramatically. And then the people behind the scam sold all their coin dramatically and drove the price to zero. And in this space, it's called a rug pull. And that's exactly what happened. But just like in real time, this is not after the fact. In real time, people looking at this website with spelling errors and grammar errors and ludicrous claims, we're saying this is a scam, and don't invest in this coin. And again, this is like before it actually collapsed. So I think that for investors, you need to do a little bit of due diligence here. And I will admit that the due diligence takes more time than in doing due diligence on, let's say, you're thinking of buying some Apple stock. Well, you might have an iPhone, you might use iTunes, you kind of know what they do. And you need to do the same thing in the decentralized finance space. You need to understand what's going on. You need to do some background before investing. So know what you invest in, and that's going to take some time.
Good. Mr. Harvey, when we talk about the American financial institutions, because we know a little bit about Brazilian market, but when we talk about American institutions, do you understand they are already digesting and looking into DeFi? Are they aware of this, I'll say maybe movement? How aware are they? And are they open to hearing about it? Are they open to be educated about it, as you mentioned?
Yeah, so it depends what institutions you're talking about. So almost every major centralized bank, commercial bank, is investigating this because, number one, they consider it an existential risk. So this is competition like they've never had before. So, and they get it. So what they're doing, they're already being disrupted by kind of the current wave of fintech. So that's happening at the banking level, it's happening at the brokerage level with the fintech brokers like Robinhood. So that disruption is already happening. But the current wave of fintech still uses the centralized architecture of our financial system. So the savings can only be reduced by so much. And the next leg is the decentralized finance. So all of these major institutions have projects, and there are some things that they can do internally with blockchain technology to improve the experience of the user or the consumer. And that basically means improved security, faster execution, lower costs, and things like that. But I think that many of them realize that this just buys them some time, that eventually it'll be a much different model. I'm not of the opinion that everything will be decentralized. So some people advocate that, okay, well, 13 years ago, everything was centralized. We got this idea of Bitcoin, and we're moving towards 100% decentralized. So I'm not of that opinion. There's certain things in our economy that are more efficiently done in a centralized way. There are other things that are much more efficient to do in a decentralized way. So we'll sort it out. I believe the banks will not completely disappear, but they'll be smaller, and they'll be doing different things than they do today.
Thank you so much for this really good analysis. I think a good segue, and you mentioned it in the previous response as well, is regulation. I think regulation right now is one of the probably arguably the biggest hurdle for both mainstream adoption and for the development of the space. As we can see by pretty much all every other week we have like the SEC versus the Coinbase, BlockFi, the money markets. They show, be it under the guise of consumer protection or by not fitting in one of the frameworks that were created 100 years ago for categories such as the Howey test. And how is it, and how do you see regulation shaping the DeFi space in the short and in the long run? I mean, obviously, there's an exercise in futurism, so it's just your expertise here.
Sure. So again, as we've mentioned, that the current set of laws don't include cryptocurrency because it's so new. It is a real challenge for the regulators. And smart regulators understand that there could be a benefit to this innovation. And indeed, many within central banks kind of see this through a lens of providing competition to the current commercial banks. And that could be a good thing. But given that this is so complicated, the regulators need to be careful, that they need to have a balanced approach. And let me elaborate as to what I mean by that. So if you go in and have very harsh regulations, then the innovations in your country will move offshore. So you drive all the ideas offshore. And no country wants that. They want to keep their best ideas. It shouldn't be that you have a great idea that you develop in Brazil and then have to go to the Cayman Islands to launch the idea. Okay, so the country is a loser for that. But on the other hand, if you do nothing, then it's a free-for-all and there will be scams like the squid coin. So you need to strike this balance of finding the middle ground. And it's really complicated to do for at least 3 reasons. So number one, to figure out how this technology works is a major investment that the regulator and the judicial branch indeed needs to make. And then number 2, even after you've made that investment, this space is so quickly moving and transforming that there's substantial depreciation. So you need to continually invest in understanding this space. And then the third factor is that the regulators have a lot of trouble hiring people that are knowledgeable in the space because those people can go elsewhere and they're in high demand. So you put this all together and it's really confusing. In the US, it's chaos effectively, where you've got 5 federal agencies that are operating independently, have independent views of what crypto is and their different views. And then you've got all of the individual states in the game. So it is extremely confusing. And one idea that might be useful is to basically have a unified agency that focuses on decentralized finance and all things crypto. So it's not split amongst all of these competing agencies. And to also give what's known as safe harbor for, let's say, 2 or 3 years. And that means companies can be innovative within the country and not worry about being prosecuted because they might be, for example, selling something that is a security where they didn't know it was a security, but that 2 or 3 years would give us time to actually construct a regulatory framework that is robust and not too heavy-handed. And I do think it is important. This is not my metaphor, but somebody at a conference made the following point, that think of a highway and driving on a highway. And can you imagine if the highway didn't have any lane markings? And can you imagine the highway, all of the on-ramps and off-ramps were completely unmarked? So that actually would be pretty inefficient. And when you actually put those lane markers and you put all of the signage up, it actually allows people to go faster and is much safer. So the idea here is that some regulatory framework could actually enhance this space, but we need to be really careful because being heavy-handed drives the innovation offshore.
Yeah, just sorry, I really loved your automotive analogy here, and just to kind of build up on that, how do you actually create the regulation, the innovation there? How do you draw up the lanes in a way that you don't have the British hand on the one hand and an American hand on the other, and then the cars clash head to head? Because it's a global industry, right? So it surely requires some sort of global cooperation. And how do you do that?
Yeah, so this is a key insight, that you need some sort of coordination. And because this is not about Brazil, this is not about the US. And it's especially challenging in decentralized finance. So I'll give you an interesting example. In the US, the exchange Coinbase was going to offer the following, that you could deposit dollars and then translate those into US dollar coin, which is a stable coin that's guaranteed by Coinbase for buying it for $1 and selling it for $1. There's no risk on the exchange. And you can deposit it in an account and earn 4% interest. So they put this forward, and the Securities and Exchange Commission basically told them, you can't do that because that is a security. And people said, wow, this just seems very similar to what banks do. You go to the bank and put some money in and buy a certificate of deposit, and it pays you not 4%, but it could be 1% or 1.5%. So if the banks can do it, then why can't Coinbase do it? Well, it's because Coinbase isn't a bank. So they're not regulated as a bank. And indeed, there's a famous case in the US where somebody challenged the certificate of deposit saying, oh, this is a security that the bank is offering. And the Supreme Court said, well, if it's offered by a bank that's insured and regulated, then it's not a security. But if it were offered by a non-bank, then it would be a security. So Coinbase had to back off, and they were essentially going to take this money, do the yield farming, probably make 8% and pay their customers 4%. So it was going to be profitable for them, but they couldn't do it because that was a security. Now let's think about decentralized finance. So you don't need to actually go to Coinbase. And Coinbase is a centralized institution or company that deals in decentralized finance. So it's like an exchange/broker. So what about decentralized finance, where you can go directly, link your wallet, and deposit some US dollar coin and start earning more than 4%? So what about that? That seems like security also. But the problem is, how is the regulator going to deal with an algorithm? So with Coinbase, Coinbase is a company. They're traded on the NASDAQ stock exchange. They've got a headquarters. They have a CEO. They have a board of directors. You can go after them easily. But how do you go after an algorithm? And indeed, you could literally shut down all of the nodes within the US. And it doesn't matter, because you shut down those computers, that's only in the US. This is a global sort of phenomena, as you mentioned. So what's the alternative? So the alternative is the SEC could go after the people that actually use the decentralized algorithm. But that would go against their charge to protect those people. Why would you go after the very people that you want to protect? So this is very complex. There's certain things that will happen within countries that will be regulated, but you're correct that this is global. And if you choose, you could essentially deal outside of your country. So it is not easy. This is a global phenomena, and we need to design regulations taking that into account.
About something when at the beginning of the internet, I remember when Metallica sued their fans because they were downloading their songs. Like, you're suing the ones that like love you and the ones that pay for your show. So now you're saying like they are going after the ones that you're supposed to protect. So I'm always making these connections between the beginning of the internet and how people dealt with the situations. And I'm seeing the very same things happening again in blockchain. And actually, I remembered like pets.com before the bubble, the internet bubble. And now I see crypto.com doing exactly like paying for Super Bowl ads. So the parallels are incredible here. Even this, I know that's a silly example, but I just remember this.
No, it's an interesting example because it's actually what's happening today is that that we've got the type of innovation. If you go back in time where people were just downloading those songs for free off of Napster and technologies like that, and they were doing that because essentially there was a problem. The cost of the music was so high that people couldn't afford it, and it wasn't as if the artists were getting a lot of money out of it. It was all the middle layer. Like for artists, it's really difficult to make a living. There's so many layers of middle people that unless you're at the very, very top, the way to make money is at a concert. So and even with a concert, You have middle people, like the people that deal with the tickets, that could take 35% of the ticket price. So you've got all of these problems, and yeah, so people start to download. But of course, that is really the artist's property, right? So we have solutions for that today. In terms of if you want to actually buy this stuff, you can buy it. And indeed, one of the growing areas in decentralized finance is the whole area of NFTs, non-fungible tokens. So you could actually buy or participate in supporting an artist, buy equity in the artist with the NFT. And that goes directly to the artist. And it's also very interesting with NFTs. Let's say you're like a digital artist, like a painter, that within the NFT, you can have a royalty on a resale. So you sell your art directly to like the customer. There's no middle person. And then if that person resells the art, then you can get a royalty. So this has completely transformed the world of art. Decentralized finance is transformational. And essentially it's taking a very illiquid asset, like a painting, and making it liquid by an NFT and dealing directly with the people that really appreciate the art. So there's a lot of possibilities here, and we're only seeing the beginning. This is really important that, yeah, it's complicated today. Not everybody's involved. The interfaces are kind of clunky. We see some people being taken advantage of. We see a lot of hype and maybe bubbles here and bubbles there. But again, this is exactly what you expect at the beginning of a technological revolution. And I think that the analogy of the internet is a good one in the early 1990s. So I think that, again, the best thing that you can do is to invest in understanding the technology. So, and there's many different ways to do that in terms of reading or listening to a podcast like this is going to be useful for people actually getting in to this space. You need to have a broad perspective and don't be fooled by the hype.
Fantastic, Mr. Harvey. I'm enjoying this a lot. We're going to put down on the description of the video the link to your Coursera, which I think would be a great beginning for somebody who wants to get educated, who is probably going to be convinced by hearing you here. And I enjoyed a lot your book as well, which I see you showing it right on your side, right there. And on the last chapter, I remember it's called Winners and Losers. And you're talking about who is getting what and who's getting the best out of that. We would love to hear from you that if you think with the current growth of DeFi, it's in the beginning, but it's growing as well. And then when we think about the future of financial institution, do you think that there will be a winner take all scenario? Maybe somebody jumps forward and gets the whole pie. How do you see that developing in your view?
Sure. So I need to take the crystal ball out and tell you my view of the future. Nobody can exactly see what's going on. So first, thank you for putting a link into my Coursera specialization. It's 4 separate courses on DeFi. It goes by the same title as the book, DeFi and the Future of Finance. So let me talk about the winners and losers. So again, I've already made the point that I don't have this binary mentality that everything is going to be either centralized or decentralized. It's a continuum, and it really depends upon a particular application, a particular problem that's being solved. There are a number of current financial institutions that will be very stressed in this revolution. So low-hanging fruit are things like banks and stock exchanges and things like that. So their business is going to be transformed. So it makes much more sense. Think about, for example, stock exchanges, where you make a decision as to where to list your stock. And then that stock exchange has a monopoly over the trading of that stock. Contrast that with the decentralized finance space, where these cryptocurrencies are traded on hundreds of exchanges. There's no process where one exchange is chosen. It's just open for anybody to start an exchange. And I think that is much more reasonable in terms of having competition. And I do think that the exchanges actually realize this. Indeed, I will tell you a story, and this happened before the COVID crisis, that I was asked by the chairman of the board of a major stock exchange group to talk to his team and about crypto. That was kind of a vague invitation. but I got to the meeting and he had assembled his board of directors and all senior management. And it was surprising. I thought it was only a few people, but it was a larger group. And I sat down and kind of wondering what the questions would be. But the first question was, how much time do you think we have? So very interesting. So essentially, they'd figured it out that this is something that will disrupt us very severely. And they were trying to get my insight on how much time. So things like exchange, things like traditional banking, things like insurance, all this stuff where you've got really heavy layer of middle people that are driving the costs up, they are basically the bullseye on them. So again, do I think that banks will completely disappear? No, they'll just have different functions. So certain things are usefully done in a centralized way. So for example, in the DeFi space, almost everything is fully collateralized. So it's like a home equity loan. You pledge your house and you get a loan based upon the collateral that you put up. And one space that is not really robust in decentralized finance is credit. So basically you can do credit indirectly if somebody provides some collateral for you. And that is a centralized function. So I think that this is going to be a very big growth area. And I think the banks will be in it in a very heavy way. And I think that the banks will be smaller. They'll be focused on different things. And I think that many will survive. But the bank in 15 or 20 years is going to be completely different than what we've got today. So one thing that I tell my students is, if you're looking for the areas that are disrupted by blockchain technology, and remember that blockchain technology is something that underpins decentralized finance, but blockchain technology can be applied in other areas of the economy too. So you look for something that has got a very thick layer of middle people, and that's a prime target to actually disrupt. And as for the ease of disruption, often it depends upon how entrenched those middle people actually are. So they will want to fight, and the banks will want to fight. The central banks are also at great risk. So let me just talk about that a little bit, that all of a sudden there's a competitor. And it's very interesting. So
for the first time in history.
Yeah, no, literally. So you could think of, the banks having, dominance over the national fiat currency. But now with crypto, you've got the possibility of having other ways to transact where you don't need your national currency. So think of a wallet that has got a number of tokens. And maybe there's a stable coin linked to your national currency. That's one of them. But you've got another token that is backed by gold. A third token that might be backed by real estate. You've got many possibilities here in your wallet. You go to pay for something, and today you pay in the national currency. But in the future, and actually today to some degree, you choose what you want to pay for. And for example, you're buying some groceries, and maybe I'll pay with my gold. And maybe the grocer doesn't want the gold, but that's no big deal because, and this is completely seamless, that the gold goes to a decentralized exchange and is exchanged for whatever the grocery store actually wants. It happens instantly, seamlessly. So you've got in your wallet all of these different ways to actually have value and to transact. And that's completely different. It might be one of the tokens is linked to a stock like Apple. Right, so you've got all of these possibilities, and essentially that's competition for the central bank. And indeed, this is why the central banks are scrambling to do the central bank digital currency, because they see what's happening. And I think the other issue, of course, is inflation. So inflation is a result of having a monetary policy that is expansionary, and it will essentially cause inflation. And think about a situation where you've got these other possibilities. So for example, in some countries, a good example of like a hyperinflationary country is like Venezuela. If you're rich, that inflation's annoying, but it's not devastating because you have a bank account in Miami in US dollars. So now think about the possibility of the cryptocurrency. So the average citizen has got a mobile phone and they can actually have US dollar coin. And effectively, what's happened is you disintermediate the central bank. And this has happened also recently in Turkey, where they're running 48%. So what do people do? They can effectively dollarize or just buy crypto. So this is competition. Indeed, I think, and this is kind of a bold prediction, that in 20 years, we'll look back at the inflation episodes as a historical curiosity. Okay, because you can hold all of these real assets and you're effectively, to a large degree, protected from whatever's happening with the fiat currency. So the central banks lose control. And indeed, I think that, yeah, China is doing CBDC. It's a hard sell. It's a hard sell in the US especially, because basically it might be okay in China if like the citizens are okay with the government seeing every single transaction that they make. That's just not going to fly in the US. So that, and it's not a partisan sort of comment, that just won't work. There's another reason that China is kind of harsh on the cryptos is that they figured it out. They're losing control and they want control. So in China, if you're well off, you want to diversify, get your money out of China. And it's difficult to do. You can transfer maybe 50,000 US dollars a year, and they want to transfer much more. But then they kind of figured out, well, I don't need to do any transfer. I'll just buy some cryptocurrency. And when you do that, that ownership is basically a record of that is on all of these ledgers all over the world. So wherever you go, you can access the ledger and do what you want. So again, that's a big threat to the dominance of the central banks, and they'll fight and they'll make it difficult. And the banks will try to fight also. But I think it's really too late. It's too little, too late.
Would you say then that there's no stopping DeFi now?
Yeah, it's too late. So there's an expression, the horse has left the barn. And I think that it's too late. This space will continue to evolve. Again, the banks will find ways to kind of extend the runway. I have no doubt about that. And all of this will be good for consumers. We'll get, the costs will be reduced. But eventually, much of the functions that they do today, those will be taken over by decentralized finance. And that will be a good thing.
Professor, I'm sure that this is the best conversation we ever had in this show. I have no questions about it. And we are like almost an hour here. But there is one thing, and I know for sure that everybody that is listening to the show wants to buy your book. I'm sure about it. So we're going to leave a link down here to your book on Amazon, but I have a very important question, and I hope the answer is yes. Are you and your publisher intending to translate the book into Portuguese?
That's a very interesting question. So only 2 weeks ago, I heard that there will be a Portuguese edition. So they've signed a contract. Right now it's being translated. And I actually personally gave priority to the order was Chinese first. Portuguese was actually my number 2 choice, but we've got translations going on in various different languages right now. So about 5 right now. But yeah, that's definitely on the schedule. It is a challenge because some of the words have different meanings. So it is a challenge. And indeed, I put up a word cloud for my students in the first lecture, and almost all the words, they understand what they mean. But in DeFi, they mean something else. So yes, we'll definitely see that Portuguese edition.
So you're going to leave the link to your book in English now here. And once it's like live, we are going to update the link here and leave also the link to your book in Portuguese.
Sounds good.
Thiago?
All right, Professor. Thank you so very much for your participation today. It was a pleasure and an honor to have you here. We wish you all the best of luck, and please do keep the flame of education alive, and let's hope that DeFi takes over the world and it becomes a force, and it continues to be a force for good. Is there anything else you'd like to say? Any key messages just for our audience that you'd like to leave?
Yeah, so the last thing I will say is something I said already, it's really important to invest your human capital in understanding what's going on. So we've talked a number of times about, oh, well, this is like the beginning of the World Wide Web in the early 1990s. There are enormous opportunities here for those that get in early. And I'm not talking about just buying some cryptocurrency, though that could be part of it. It might be that you actually invest in a startup company or become part of a startup company. So this is just the ideal time at the beginning. It is potentially a historic opportunity. I see that our system will be transformed for 1% into this. So I hope that many people kind of join in, because if you don't, you run the risk of being left behind.
Thank you so much, Professor Harvey. Well, for you folks, please hit subscribe, hit like, and help us spread the word about our channel, Contos do Cripto. Thank you very much for all being here. See you next time. See you in the next episode. Have a good one.